Hello everyone, welcome back to Lab for Crypto. Today we are going to have a discussion about our unique and hybrid risk metric. And before I go to the nitty-gritty of this model and explain more in depth on how to use it, and also show you actual results of the model using my documented journey in the Telegram Premium, which I share what I'm doing there using the model. But I will first explain the reasoning behind the creation of this model and then go to the actual values. The reason that I chose Bitcoin and Solana is because Bitcoin is Bitcoin, and Solana was something that it had a huge rally recently. And it's good to see the performance of the model and how I used it to make my decisions. Let's go to the reasoning behind the model. I know that not a lot of people have the time to go through all of this model due to their work or because they have to spend time with their kids or whatever. And by not having the time to watch all of these graphs, definitely you are in a disadvantage, as when you want to make some decision about your portfolio, about allocating some of your hard-earned money to some asset, whatever asset that it is, even in stocks or in crypto or whatever, you need to have the data, as the data is the new oil, in my opinion. And I was in the same boat with you back in 2020. I was in academia. I didn't have time to spend buying all these models and watching every chart and try to understand what it's better for me to do between them. And also some of the models were saying something else, and there was a divergence between the signals. I wanted something that when I was in the train or in the bus and I wanted to allocate some of my fiat, I will open my phone, check a value, a single value that is gonna give me an understanding where the market it is now and make my decision. Of course, when your portfolio becomes bigger and bigger, you will need all the charts, as when you're going to do large trades, it's better to have models which are focused to each region. For example, when the Bitcoin bottom was in 2022, in December, November, I used this model when it was telling me that the risk was low, and I combined it with our bottom range model, which when these two models were telling me the same story, and I saw the Bitcoin price bouncing on this model, then it helped me have more conviction about my trade and allocate a big chunk of my portfolio. But let's go to the risk first and see what it can tell us. This model now, it's the combination of all these models that you see on your left side, most of them at least. It's the on-chain metrics, as in crypto, in blockchain, the data are publicly available if you mine a token, and you can know when someone is sending a big amount of coins to someone else, when you see something that is weird and it shouldn't happen, when you see large whales accumulating when they are not, when something fishy is happening, and also the off-chain data, which is something that everybody uses from the traditional finance, which is the price, the volatility, the volume, and all that metrics that it's used in Forex, stocks, and whatever other asset class. It took me 8 months, sorry, to build the model, as I wanted to filter all the noise and try to have the as good signal as possible on my off-chain data and the on-chain data, and give me a single value that I will open using my phone, see a value, and take a decision. I will show you some examples, but as I said, there is an in-depth strategies that you can use and watch using the video explanation below the model. And also I have some in the information section and the how to use. But let's see the most recent one, which was Solana. Solana crash was because of the FTX fiasco. FTX was a major holder of Solana. And after they announced the bankruptcy, many believe that Solana was poised to go to zero, basically. Because if we check FTX, we saw that after the bankruptcy was announced, was hovering between $30, 25 to $30, and after the bankruptcy went all the way down to $1. And the same fate was expected for Solana. And as I am in this model now, this is the power when you have a hybrid model. Imagine that 3 months before the FTX crash occurred, this model was signaling to our users that something was off with FTX, as when hackers or major holders of an asset, and especially in a centralized manner, think that something is wrong, we can see some behavior that it can help us identify that something is off and we can reduce our risk. And I was lucky enough to see these values in our model, and I transferred all my FTX holdings from the FTX exchange to Binance at the time. But let's go to Solana, because it's a recent example. On Bitcoin, it's clear that the model did an amazing job, and I will come back. But let's see something which is really recent. Solana, as I said, had this drop, which the model was signaling that it was a really good time to accumulate Solana, as the risk was 0.9, and the price was at $9.97. As we can see from December 31st of December 2021 to 22, the Solana had a 12x gain in a year. So it started at 9 point, let's say 10 for simplicity, and it went all the way up to 120. And the main goal of an investor which does not have a lot of time and wants to make the most of it is to accumulate in this region when the Solana risk was low and exit when things are starting to heat up. And that was something that I did, and it was a point which I exited with 35% of my holdings at that day. And the reason that I didn't went with even more is due to the great performance that Solana showed compared to Bitcoin. If we check the recent comparison between Bitcoin and Solana, we will see that Solana is outperforming Bitcoin by far the last year, but it remains to be seen if that is the case. But when I made my decision, I used the risk metric, which was signaling that it was a good time for me to exit, and I adjusted my percentage. I knew that I had to exit, but to adjust my percentage, I had a look on other models as well. But even if you just saw the risk metric and decide to even one-off and exit, you will did an amazing job, as Solana went from $121 to 84. So even if you believe in the Solana ecosystem and you want to invest even more, you could exit here and accumulate it again at that point, or even at $100 that is now. And if we go to Bitcoin, the uniqueness of the model and the reason that I wanted to talk a little bit about Bitcoin is due to the fact that this model was, I think, maybe the only one that managed to identify both peaks of Bitcoin, the double top, as most of the models were signaling that Bitcoin will go even to 100K after the November peak. And that model did an amazing job showing that the risk was high and it's good time for you to exit. And it's clear that when it's zero and at high values, you exit with the big chunks. But what you will do between, it depends on your risk tolerance. And someone can say, I only accumulate between 0 and 30, 40%. I hold between 40 and 60 or 40 and 50, and I exit when the Bitcoin goes above that values. And that is something that I explain in my strategies video. And in short, this video is something that encompasses all the on-chain and off-chain data in one value. And when you are in your car or to work and you don't have the time to spend to check all these graphs, you will be able to see this single value and help you make informed decisions. But you don't have to follow this model. And I'm clear about that. I did it for me, and it's something that then I decided to give also to other people to use. You can find any model that you trust, and you need to stick to it, because the most important message of all today is that you need to have a plan. Many people didn't experience the previous run, and they join now. And when the actual bull run comes, you're going to lose your mind if you don't have a strategy. You will wake up and you will see some 20-30% gains per day, and you're going to be like, shit, what I should do now? I mean, I should exit. And unfortunately, when there are these huge gains, you will see multiple influencers coming out and say this, because influencers is a game of attention. And when there is a big gain on an asset, you will see many influencers trying to pump the market and then dumped it, fortunately. And therefore, for me, I wanted to have a value, a mathematical value, let's say a probability, which I'm going to use to help me make informed decisions. And do not be mistaken, you're going to feel really weird when that happens, because always you're going to question yourself. When Bitcoin was at these levels and the risk was at 99% and the price was 57.5, imagine that you exited most of your position here. You will see that Bitcoin hovered more than a month to these prices and then dropped to a lower price. So when that happens, because you will see a lot of articles, a lot of people saying that the asset, and let's say on that case was Bitcoin, 100K is imminent and all that, you will feel very, very weird when you decide to exit. But the important thing is to exit at levels you are comfortable with. No one can time the exact top or the exact bottom, and therefore you need to dynamically enter the market and dynamically exit the market. Based on my simulations, I noticed that it's not good to try to trade crypto and especially Bitcoin every day, because Bitcoin has these huge spikes, which if you try to make these trades every daily or hourly, you will notice that you can miss the boat really, really fast, and especially in the bull run. So you need to dynamically enter and exit if you're going to do that, and never go all in or all out, as it's a really, really bad strategy. Only even if you just use backtesting on trading, you will see that if you try to do that, it's a really bad decision, as crypto have a lot of leverage, as the exchanges are allowed to have even 100 and 200x leverage, which when there is a squeeze on the supply or whatever other reason, there is quick liquidations on both sides. And in my opinion, when I check this backtesting, I found that even if you find yourself trying to trade every day, if you are not a full-time trader, it's not your job, and you are just a regular investor, it's better to make a trade based on risk metric or whatever, and close your phone and open it in a week or in 2 weeks and see where the market is going and do another trade. Using the Bitcoin as an example, when, and I will explain you a short story what I have done. I exited at that point. I re-entered when the Bitcoin price went to 29.7, as I knew that we are in the bull run. So I moved my accumulation zone between 0 and 55 to 60%, and the exit region when we are above that level. But as I said, it's something that you will need to decide about what risk levels you're gonna adjust for buying or for selling or holding. That it depends on you and your risk tolerance. And when we have moved to the 66K at 79% risk, I exited again with most of my holdings. Moving to Solana. Solana, in my opinion, has a really good narrative for the next bull run. I know that a lot of people say that it's an Ethereum killer and probably is going to lose. And we have these times where the blockchain is basically off when they have this problem with validators. But when I see developers building on Solana, seeing a continued growth on it, when we see also the active addresses, the new, and actually it stalled, Solana stole a lot of users from the Ethereum ecosystem because it's really cheap, and you have a coin which outperformed Bitcoin in the last year. You have developers building on it, and you see growth. Then, at least probabilistically, it has a high chance to do really well in the actual bull run. And I hope that using my explanation of the price vs risk that I gave you, it was enough to give you the single message that I wanted to deliver through all of this video, is that have a plan, follow metrics and models that you feel comfortable with, and even if that models give the same answer, that is even better because your conviction increases. And the second part of my message today is no one knows exactly what is going to happen or tomorrow or in a month or in a year in the crypto industry or in any industry. You need to daily at least spend 10 seconds, check the metric that you are happy with, as there are many metrics in the market and people decide to create their own models. For example, the Puel multiple, which is a model that was created by David Puel, and you can find any others in our platform that you can follow. And when you have something that you want to invest in it, spend this time, follow the model, take your decision and stick to it. As if you do not do that, you will feel like you are crazy when the crypto bull run starts, as you will feel that you don't have something to point you in the direction that you are going. And for me, something that the risk level helped me really, really well in the previous bull run. It was times that I felt really, really bad about exiting the market, as I was seeing everywhere everything is going to the moon. But I said in the end, I will sleep better at night if I knew that my probabilities were with me and not against me. Even if the asset, even if Bitcoin at that level, for example, went from 58K to 65 at that time, and the risk was telling me that that was a good time for me to exit, I will still be happy exiting at that level when the maths or are telling me, the probabilities were telling me that it's a good time to exit, than just blindly stay there. And when I wake up a day, because we have these sharp drops in crypto, have a drop of, it was 56 and dropped to 34 in a couple of days, and wondering, oh shit, I should stick with the probabilities. And that is why you will see this model in our platform daily for many assets. And I hope that it will help you get the most of it on the next bull run, because in my opinion, it will be one of the best, as we have the quantitative easing, we have the Bitcoin halving. We are at that levels where the retail investor has not joined the party yet. We will see that we are at 822 out of 100 of the interest over time. So the people that Google Bitcoin are actually in the levels of a bear market. So by taking the decisions that it will help you increase your portfolio performance now, maybe it will be once in a lifetime opportunity to create generational wealth. And we believe that the platform can give you these tools, but you can use, as I said, any model that you like and build a generational wealth portfolio. If you like the content, please like and give us a comment, as that will help the algorithm show our metric to more people. And until next time, bye bye.